Stocks lower on more concerns about a slowing global economy. The S&P is closed below the 10-day moving average, signaling a short-term momentum change. All eyes are on Super Tuesday as well as Friday's important jobs report. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with TheStreet, and together we bring you Morning Call. So Scott, we didn't close below the 10-day moving average yesterday. This is the level you've been watching all along. So where are we going now?
Well, we talk about the importance because we watch trends, and we try to, as traders, ride trends as long as they stay intact. And this 10-day moving average has been intact almost completely since the December 20th gap and go. So yesterday closing below it, to me, was a short-term momentum signal for change. I know last week we started to see some weakness, so it was a time to get rid of some longs. Yesterday was another sign to loosen up, and maybe if you're a trader, get net short.
Now, speaking of signs, in the short version, we discussed a little bit that there were some signs, some indicators, perhaps leading, giving clues to the action yesterday. Can we talk a little bit about what those were? Yeah,
first it was the Russell. The Russell started to break below that upper channel last week on Friday, actually. And you never want to see the Russell lead to the downside because it's the risk. It's where people want to put more risk on. So when you see it lead to the downside, sometimes gives you question marks of the overall rally of the market. So if you look here at the IWM, you will see that this upper range that was looking good for a while started to break to the downside. So that meant some bulls were leaving the camp, and that meant you had to take a little bit of notice. So today, I know yesterday it reversed off the low, so this is a good spot to look at today, because if you're not in the Russell and you're looking to maybe buy around the 50-day, this is a nice spot. That's about 79.08. And if you look at also at the semis, you will see that these two also, start to lead lower before the market, because this is below the 20, the 10, and now this is coming right into the 50. So I think if you're looking to buy a dip, this spot around 33 would be a good one for the semis. But now, Brittany, if we go back to look at the actual S&P, you'll see why. You'll see that these were leading the S&P that just got below the 10-day. So now if you look at the SPX, which is the futures cash, you go here, you will see that we just got below this 10-day moving average. So you saw in the Russell and the semis, we were already way below. So this was a sign to loosen up. If you take a closer look here, you will see that the trend that we've been in since December 20th, we've been just riding this 10-day. Here it is, riding it. First time we tried to close below it, didn't really amount to much. Here we hovered on it, and then this was the first close. Actually, if you look at the trend line below that as well. So now I'm going to see if we could get back above the 20-day, which is 1358. If we can get back above that, we could be seeing 1340, which what I would think is a good spot to watch to perhaps cover shorts. And then I think the compelling area to get long, where you have to look to buy back some longs, is right around the 50-day moving average. But I'm not sure we might get there, so you might have to start a little bit early.
Okay, and just to note, yesterday commodities were hit the hardest. So where are you watching the commodities today?
Well, gold last week on Wednesday had one of those potent, harsh down days. One of those days that you have to take notice. It stopped a lot of people out. If you look here at the GLD, you will see that this group itself had a harsh move. This was that move on Wednesday when when Bernanke was testifying on the Hill. A lot of people got stopped out right there. Okay, it engulfed this entire area here, which you never want to see. That's why you get out of the way. And now we've been developing this little inside range. We've been talking about if you can't take back 167.50, 168, we could see more downside action. So now today, we're opening near this pivot low of 164. Watch that closely. If we get below this and below the 50-day, you could see more downside action. But I do think if you're short, this is a decent spot to cover. And if you're looking for a long, maybe traverse that area. But again, if this pivot gives way, use that as a spot to watch. And you could see some more downside action, especially with a close below there.
I think it's interesting to know that in 2011, the best performing sectors were the defensive sectors. And now we're seeing the cyclical sectors like tech, retail, financials do the best so far this year. Do you think the risk on trade can prevail?
I do think so. And I just think there's going to be times to be heavy, times to be light. If we look here just at the Qs, you look at right here, you'll see that this indice just came back to the 10-day moving average, okay? And it's really at an important spot. So if the Qs were to break below this area, this is probably a zone to watch right around the 20-day and then right around here. And we're opening below that now, so we need to see if it could take that back. So here's a big support here on the Qs. That's right around 63.33. If you want to watch something within the Qs, watch Microsoft. Microsoft's had a really big move, ever since it broke this downtrend down here. It's been riding this accelerated uptrend. I do think some could trade it long versus yesterday's low, but I think you could buy back Microsoft if you want to buy a dip somewhere around 31 to 31.20. This would be a good spot to buy the dip there.
Now let's talk about retail, because retail did have a very strong quarter of 2011. The strength obviously has continued into this year, but as consumer income in the country has not increased, does that indicate not only that consumers are spending on leverage or savings, but that the strength can continue?
We're in a weird spot because a lot of fundamental guys out there are saying that there's so many people in their homes not paying, that's not laughable, not paying their mortgage, not paying their bills, but they're buying what they need, and that's why it's perceived that the consumer is strong. But I don't think you could or delve too far into that. What you do is you watch the groups, you see how they're acting, and right now the RTHs in retail is still a strong spot. If you look here at the chart on retail, you will see that it's still above the 10-day and 20-day where we showed you that the Russell, the semis below, it's still riding this new trend line ever since it broke out right above this resistance here. So you could see a little bit more of a pull in here. I would write down this level of like 39.72. If it were to start breaking below this area, I would get a little nervous, and if it breaks below there, I think you will have a viable pullback right at the 50-day. But overall, retail has been strong. Tech has been strong. The Russell and the semis have been a place that have had some weakness.
And the financials, of course, are strong as well, but they face a lot of risks. They face European contagion, regulation in the pipeline. When it comes to the financials, Scott, where are you watching?
JP Morgan has been something I've been using as a vehicle all in 2012. I've traded, Morgan, I've traded Goldman. Right now JP Morgan is in a little bit of a pullback mode. I think it'll be buyable. I think you buy it near the 10-day or the 20-day. If you look here at JP Morgan, you will see that this spot right here looks like a prune spot to get involved. This was the last time it broke above this resistance here of around 38 and change. I think you rebuy into this 39 area and it can continue. But also, don't just fall asleep at the wheel. You do have a nice uptrend that it's been following here. So if it breaks this and we get some real weakness in the market, you could see the 50-day. So I would have a plan in place for these financials and as well as the market. Know where the 10-day is, the 20-day, the 50-day. Know if your sector is leading, if it's lagging, and just really have a plan, because on this pullback, I think there'll be a lot of money to be made.
All right, well, now on the other side of the coin, we're going to jump into three sectors that are showing relative weakness right after this.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, and we're back. We're going to dive into three sectors that are showing relative weakness right now. Scott, let's talk about oil. We're seeing a little bit of a tug of war with the price of oil. We're seeing tension in Iran supporting it, weakness in China pushing it down. Where are you watching with oil?
Oil did one of those push-through failures. It went through that 110 last Thursday. We were on the desk. All of a sudden, you heard the rumors that a pipeline blew up, and it pushed through, squeezed some shorts, came below it, and as of right now, that's been the short-term top. I think for oil, you watch 103, 104, that's decent size support, and then below that, obviously 100 psychological, but I don't think we break much, too below that. But I think you could buy it back around 103, 104, and also look today, it's down, maybe it tries to go positive for a Q trade, but recently we've spoken about the OAHs. Since the beginning of the year, in December, we put together a pattern or a thesis to buy, and this group has shown a little weakness with the higher prices in oil.
Now, we also touched on the semiconductors before. Let's talk about Novelis. Can you show us that chart?
Sure. Well, before we get to that, I just want to show you the chart of OAHs. I don't want to be too fast here. So look at the OAHs. Look over here. You'll see this is the pattern that we isolated: the left shoulder, the head, the right shoulder. This was buy area 1. Buy area 2, and then this was that last area to buy for momentum, okay, but then we just closed below it. So if you're a momentum trader like me, you take a few tiers off. If you're not committed, you get loose, but then I think this area will be buyable. This is an area around 41.50. You could buy it, and that will be a test of this more gradual trend. Now, like you said, the semis, like the OHs, have been a little bit weaker. So stocks within that group are probably showing a higher beta weakness. So which one did you want to look at?
Novelis.
Okay, so we'll take a quick look at Novelis. We'll see what's going on here. If you look at Novelis, you will see that this stock yeah, like you just said, has been weak. It's below the 10-day, below the 20-day. It's actually even below the 50-day. So, that's showing me some signs of weakness. I do think that you will have some decent sized support coming into the 42 area. That's the next area to watch. Again, if you look at, just say, let's go look at Intel, which is a bigger barometer. I would watch this very closely because this upper range has been very, very faulty. It tried to hold it yesterday. This 50-day moving average is 26.16. It better hold that, because if it doesn't hold this 50-day, you're going to see stocks like a Novelis, a CLAC, maybe a SLB, not SLB, the other one that starts with an S, probably get weaker. So watch Intel and watch the higher beta names as well.
Now, you would think with Apple doing so well and mobile devices only growing, you would think that this sector would be following suit as well. So where is it that the weakness lies?
Well, it could be many things. So sometimes if you ask too many questions and you're like, wait, Apple's doing so well, why are the semis, the nuts and bolts, why aren't they doing so well? The price action has been telling you that there is some weakness there, but I do think it will be viable. I think mobile devices are the way of the future. I think if you want to be in, what's it called, a guts, or just say a semi name there, I know Stephanie likes Broadcom. And Broadcom is a big name there. So if you want to look at Broadcom on this pullback, I think it's viable. I'm sure we'll get into that more tomorrow, but it broke this upper level, right? So now coming into here, this 34.32, I think at the 50-day is a spot if you wanted to buy this dip and you believe in the Broadcom story. If you didn't pay up, which is great, you could buy the dip, and that's right around 34.
Let's talk about the small caps, because another area that's showing relative weakness. And one could argue that the large cap outperformance relative to small caps is largely due to international exposure in emerging markets. What about the small caps? Where is the weakness there?
The weakness is just that it's like a risk barometer. And like we said, when the small caps lead us higher, we consider that healthy. We consider that great because people are looking for risk, they're looking for the youngest, most innovative companies out there. So when they lead us lower like they have, you have to look at that, because large caps typically are the multinationals, like you said. They're liquid. People go there for safety. They have the dividends. The Russell usually doesn't. So you want to see how it goes, or how that transpires. But for now, I'm not reading too far into it, but I want to see the Russell hold the 50-day moving average.
Are there any signs that we should take from the IWM chart?
Well, at this point, hopefully you took them, because they did break down, and you should have loosened up a little bit, because at this particular point, I think you should be a buyer into this area. You should be a buyer into this 79 or into this more gradual uptrend. We already pierced this one, okay, and then we went to the right side of it and rolled over. So now I think it's going to be important to see if this holds this. If we don't hold this uptrend right here, we're going to see some more downside, and then I think this retracement will be bigger than most people even want.
All right, let's just go over some stocks really, really quickly. Let's go with your game plan on Apple.
All right, so we're going to do some quick hits. First one, Apple. Apple broke that upper area. If you look here at the chart, you will see that below that 342 area was a nice little short if you took it. If you didn't, we bounced off the 10-day. Watch yesterday's low of, what was this, about 527. If we break below this, you're going to see some more weakness, and then you have the 20-day coming in around 514.
All right, IBM, another highlight from yesterday.
IBM pushed through resistance. It closed really strong, very impressive, was good for cash flow, good for investors. I actually got stopped out of my trailer in the weakness. It still looks good. I still think you could stay with it, but if you wanted to be a little risk averse, put a stop around 198, and if it happens to trade through yesterday's high of 201.19, you could see some follow through for cash flow. That's if the market reverses today. And
Starbucks keeps climbing higher. Is it going to keep going?
Yeah, yesterday this was one of the first ones to go green. Very impressive from a trading side as well as an investor side. If you look here at Starbucks, it tried to go yesterday. It's hard for a stock to break out when you're getting pressure on, but if you look here, it's holding higher. So as long as it stays above this area of just say around 48, I do think when the market starts to turn around, this could be one of the first ones to extend into new highs.
And now we talked, of course, before about relative oil weakness in oil, but Exxon not necessarily the case. So what are you thinking about Exxon?
This stock has been holding up. If you look here, there's a lot of conservative money hiding in this one. They have a dividend. There's a lot to like here. It's following a trend. You can look here. You see a nice, strong, gradual trend here, which it hasn't violated. It's still above the moving averages. It's going to need a better market. So if the market reverses today, you watch this one, because above 88, it should make new highs. It just, you're going to have the market on its side. And right now, we have to figure out if this retracement will be deeper, or if today we get a, it's not turnaround Tuesday, but a refresh Wednesday.
And last time you and I spoke, we touched on MasterCard. What's your game plan with MasterCard right now?
MasterCard I haven't really traded in a while, but it's been one of the strongest ones. If you look here at the chart, you will see, you had a little bit of a pullback, nothing crazy. This was the last buyable area right around here, pulled back to the 10-day moving average, and it went green yesterday. So that went green yesterday with the futures down today. Maybe look to buy it versus 2-day range, but if it breaks below that 2-day range, just like everything else, the next moving average underneath it is right around here at 404.
And gold, of course, has been beaten and battered. What's your point of reference with gold?
Gold last Wednesday got crushed. It was battered, bruised, it happened fast. Everyone was blaming it on a fat finger trade or an algo that triggered the wrong way. But if it was not the right action, it would have bounced back much quicker. So we tried to put those retracement rules in front of you saying if it can't bounce back more than a third, the down direction should control it. And if you look here at GLD, you will see that this down move right here was very, very harsh. It had a little snapback on that Thursday, and it's in this minor range. So if you're trading it in this minor range, make sure to use this 164 as a point of reference. If it breaks below the 50-day and this low, you're going to see more downside action. But if you are short, I would cover some into this and then figure out later in the day if this pivot proves to be resistance or support.
All right, Scott, let's talk your strategy for the day. What's the one thing you're looking at today?
I'm going to be looking at multiple things. Right now, with the futures down 10, 11 handles, what I'll look to do is I always cover, whether I'm long into an up opening or short into a down opening, I cover some on the open or even some pre-market, and then I like to see what the composure of the market is. Today, with the futures down 10 or 11, I'm going to see if anything can go green. Does anything lead us out of this down open? Is it the banks? Is it tech? I'm going to watch Apple as a barometer. Does yesterday's low hold? If it holds and starts to go green, you'll see tech come with it, and then the down move will be muted. If it can't hold there and goes to the 20-day, this down 0.6% or 0.7% could turn into a 1.5% down move, which we haven't seen this year. So there's going to be a lot to watch. The bottom line is know your time frame, have a game plan, and then wait for the market to confirm it.
All right, good stuff. Thanks so much, Scott. Happy trading, everyone. Have a great day.